Welcome to Short View Trading. It's your morning market here for Monday, 23rd of October. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Long View Economics and Short View Trading. Now, if you want to go about trading equity markets on the classic swing trader time frame, 1 to 2 weeks, long or short, equity index futures, whether it's S&P 500, FTSE DAX, NASDAQ, or equivalent equity index futures, what factors do you need to look at? What do you need to think about? How should you go about trading markets on that 1 to 2 week time frame? That's what we're going to think about in this video. Well, it's certainly difficult out there. Markets are selling off. They continued to sell off last week. More downside across all key major equity markets across the globe. Just look at the US markets that we're putting up in front of you at the moment. This is a week-to-date performance, the weekly performance for last week across a whole raft of US key equity indices, mostly down 2 or 3%, some down more like the Philly Sox, around 4% down on the week. And of course, that's not just a US situation. Europe was similar. It was similar in Asia. In fact, if you look at Asian markets overnight, Monday night, you can see that actually something like the Shanghai comp moving to new lows, as is the Hong Kong market, their lowest pretty much in about 12 months. So it's getting hairy out there. And the question is it time to panic? Are markets about to capitulate? Are they actually growing and about to create a really interesting opportunity on the other side of the equation? And in that respect, there are three key factors to think about when working out how to trade this market, either long or short, on equity index futures. So the first key factor to watch is a whole bunch of markets at really key levels. Take the S&P 500, the chart we're putting up in front of you now. This is right at the bottom end of its uptrend channel that's been in place for over 12 months. And it's also sitting on its 200-day moving average. So it's at a major support level, which is a critical point in the S&P 500's journey. But it's not just the S&P 500. Take the small and mid caps in the States, the S&P 600, the small caps and the S&P 400, the mid caps, both sitting on key multi-month lows and key support levels as well, while something like the Philly Sox is sitting on its 200-day moving average. So a whole bunch of US markets at a key level. And then if we look in Europe and Asia, as I mentioned just now, these markets are starting to break down. Just look at the Euro Stoxx broad index, broken below its March lows, looking pretty poor from a price action perspective, and looks like it's in a pretty nasty downtrend. Similarly, you could make same sort of comments about the DAX and the CAC, a bunch of other European indices, and also some of the Asian indices. As mentioned, Hong Kong's Hang Seng and the Chinese Shanghai market behaving very poorly from a price action point of view. And the second key factor we watch is our short-term market timing models. These are the 1 to 2 week models that help us to judge whether to be long or short equity index futures. Last week, we saw the Nasdaq 100 technical scoring system, for example. One of those key models was on sell. That was helpful in being short over the course of the last few trading sessions. Now, though, models in aggregate are moving towards buy levels. This is what we talk about each and every day in our RAG Trader, our daily RAG publication, which you're welcome to take a free trial of. Click on the link below and sign up with your name and email address, and we'll send you the RAG Trader for free for a bunch of trading sessions. In that, we talk about all these models. So it's not just the technical scoring system for the NASDAQ. As you can see from the S&P 500 technical scoring system, which we're putting up in front of you now, that is also back on buy, and a whole bunch of other models, risk appetite, put to call ratios, other technical models, all sorts of spread models are all moving towards that kind of level. And then the third factor we're looking for arguably is capitulation. Markets have got a pretty serious downside momentum in place, particularly in Europe. And usually, I think in that instance, you'd look for capitulation to feel confident that these markets have put a major local low in place. Now, capitulation is pretty aggressive downside selling accompanied by heavy volumes, and then actually typically a V-shaped price action as it bounces sharply the other side of that selling. So capitulation is a third factor we think about in these markets. And then on top of thinking about those three key factors, it's also worth focusing on the fact that it's US earnings season this week. It's been going now for 10 days or so. We're getting into the guts of it. A lot of companies reporting this week. So far, we've had 86 of the S&P 500 report. In aggregate, they're generating an earnings surprise to the upside of around 6%, 6 and change percent, which is good. The normal upside surprise is 3 or 4, so a bit better than expected on that measure. They could potentially provide support to this market. This week, we've got some big earnings out. We've got Amazon, Meta and Microsoft. Three key stocks, three of the Magnificent Seven, the mega cap tech stocks that have been leading this market higher in the first half of this year. All of them got pretty interesting price patterns. Microsoft sitting on its 50-day moving average. Might it break down from there on its earnings? That's a key factor to watch, critically important. Facebook looks like it's put a double top in. What will its earnings do to that price action? And then Amazon looking quite weak over the last few trading sessions. So that's critical, as well as those three key factors that we mentioned earlier in the video. All of those we'll be watching to work out whether or not we should be long or short this equity market on a 1 to 2 week time frame on it, using equity index futures, typically S&P 500 futures. So if you're interested in more on this, please do click on the link below and take a subscription to the Daily Rag, or the Rag Trader as it's known as. It's free. All you need to do is put in your name and email address. We'll send you the Rag Trader for free for a bunch of trading sessions to see if it's helpful to you and of interest to you. So what are we watching this week? Well, there's a bunch of key themes. Firstly, as I just mentioned, earnings continue in the States. Mega cap tech stocks, Meta, Amazon, Microsoft, as highlighted, all reporting over the course of this week. But it's not just them. You've also got UPS, which is often very interesting, Visa, MasterCard. All of those give some insight into the economy and the strength in the economy, and a bunch of other stocks in Europe as well over the course of this coming week, including a bunch of UK and Eurozone banks. So that's one key theme. A second key theme over the course of this week is central bank meetings, the ECB in particular, meeting on Thursday. No change expected on their interest rates, but what will the tone of the conference from Lagarde, the press conference, be like? That'll be watched closely. We've also got the Bank of Canada having a policy meeting this week, also expected to leave rates unchanged. And then finally, a bunch of macro data, including flash PMIs earlier this week from across the West, across the globe really. Manufacturing service sector first take on economic activity this month, and followed up by a bunch of other data over the course of this week. Lots of actually Eurozone data that's quite interesting. Bank lending survey, which is their credit conditions indices, IFO, M3 money supply, and a bunch of US data as well. So that's it from us. That's your morning market hit for Monday 23rd of October. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button, or follow us on LinkedIn, Twitter, and on Facebook. Thank you for listening. Stay safe, trade well.